Hi everybody, it is time for my weekly video log, and I would say this is the best one I've put together so far. You should learn so much in the next 10 or 15 minutes as it's better than going on a training course. I'm going to look at the market. I'm going to look at my stock picks, but a bit different this week, and a lot of stuff in the club section. So first, the market. And you've got two visuals here. The one on the left is how the market finished on Friday a week ago, and on the right, how it finished on Friday this week. Of course, there was news at the end of the week with the fighting in Israel and Iran, and I think the market might be waiting to see what happens a bit with that before it decides what to do about it. I'm going to actually stand back for a couple of days. I'm traveling anyway, Monday, Tuesday, Wednesday. So I haven't actually done my picks as normal this week because I won't be trading, but I will be doing them later in the week. So the clubs, and anyone that knows me knows I come from a manufacturing background, and my big thing is continuous improvement. At present, I am making improvements to the trading system just about every week, and some several times a week. Some of the changes have large positive implications for improving gains, others are a bit smaller. This week, I've introduced a new cash target. That is a level of cash to be maintained in margin-bearing accounts. And my research suggests that the cash should be maintained at between 20 and 30% of net liquid value. And I'm going with 30%, but we'll keep it under review. However, I haven't stopped there. I'm now also checking that the trades that I am proposing don't use more than around 25% of the price of the stock, or if it's a, a stock purchase, or 25% of the strike price if it's a put. I've got two examples here. So the one on the left is from Google, and you can see 24.55. That's fine. I'm not looking for exactly 25% either way, because the actual figure does depend on whether there is a difference between the strike price and the stock price. On the other hand, if you look at Root on the right-hand side, you've got nearly 75% usage of stock buying power there. That's no good. I would immediately be dropping that trade. This week, I also began to take more notice of the predictability score. That comes from Value Line from the PDF and reflects the last 8 years of how well management teams have been able to predict their earnings. The range is from 1 to 100, with 100 being good. And depending on how well the stocks fare on other filters, I'm looking for 50% plus. If you look at the PDF, it's right down the bottom right-hand corner there. We've got it there. This is for Google, and it's got an earnings predictability score of 70, which is fine. Now, sometimes the argument is presented that a low predictability score could reflect a new, vibrant, thrusting company where they can't actually be very certain about the exact level of sales or earnings. That's fair enough, but that's not a company I would be interested in. I like slowly, boring, profitable companies, not ones that I don't know what they're doing. I've also now built in a discipline of checking the PE ratio of every potentially tradable stock, and I'm looking for a lower figure than around 25, although I would be prepared to make exceptions in the right circumstances. So also now, moving away from those changes, we are nearly 1 year on since I changed the trading system. That was on the 1st of July 2024, and I radically changed how I select stocks and how I trade. Now, I'm impatient to see the outcome after a year, so did a sneaky preview, and here is what I found for the Fortune Club. I'm going to explain on the next slide what it is, but you'll note we've got two figures at the top of the table, 39 and 50. 39 were the months that elapsed up to the 1st of July last year, and we're now at month 50. So the figures in that column under the 39 represent the progress made in all of those 39 months. The figures under the 50 figure there, they represent purely the progress made since the 1st of July last year. I'll summarize them. So, in its first 39 months, Fortune only made a net liquid value gain of 7.67%. In the last 11 and a half months, the net liquid value increased by nearly 25%, 24.82, and that is 2.64 times the change in the S&P index over the same period. Yes, I'm saying Fortune improved at a rate of 2.5 times that of the S&P. In the first 39 months, Fortune got a left-in value increase of 20.98%. That doesn't sound quite so bad. And in the last 11 and a half months, that left-in value increased by 43%, which is 4.58 times the change in the S&P 500 index. That's how well this trading system is working. We weren't particularly helped by the market in that time. We did have some serious lows, including, you remember, the Trump slump. So perhaps you should join my online course, if not the Fortune Club, to find out exactly how we do this. Okay, so the picks. So as I say, I'm not actually presenting picks for this week, but I am going to look at the picks that I had in last week's video because I updated them at the end of the week on Thursday to see if they were still valid. So let's have a look what came out of that. And remember, so the charts, I look at the charts and indicators, I look at the better investing, sales and earnings trend charts. I want Zacks ratings of at least 1, 2 or 3, and also value line ratings of 1 or 2 or 3. I want good value line positive comments. I want put premium to be good. I want now a new one in here, that's why it's highlighted. I want good predictability of earnings and stock buying power usage, and a good annualized return on investment. So, as I say, no picks for this week, and let's see what happens. So instead, I'm going to demonstrate this. So here we go. So this is the first part of the assessment that I did last week. So we've got the stocks, we've got the closing price a week gone Friday, and we've got the price as it was at the close of business on this Friday. And also I've got the PE ratios in there. So I've looked again at the charts, so they were all okay at the end when I did the original assessment. We've had some changes in the week, so I've now got a lot of them that I'm no longer happy with. That could be that they're a falling knife. It could be that they've popped, they've already gone up a lot or whatever, but I'm no longer happy with them. We get new value line ratings on Mondays. So after I did the assessment and we had a new one of 4 on Wix, so it failed for that as well. And we also got one that had changed during the week on Gap. It had gone to a 4. So we've got a few of these being cut out here. Then we go across and there are no new figures on sales or EPS to look at, but predictability, perhaps it depends on when the reports came out, but it's really the fact that I'm checking it now. Now, 25 is low on that scale of 1 to 100 for BMRN, but I think I've decided to live with it because I liked everything else. However, then you come to Gap, which I've already thrown out, which is a 10, Wix, which is a 15, and BMY, which is a 5. So I threw all of those out. Now, I also looked at the expiration dates and the strike prices. Where I've colored them in green here, I actually got a lower strike price by 1 step, so one strike price lower than I originally intended. So I've colored them in green. They've often been thrown out for some other reason, but that's where we're at. Now, it was too long a spreadsheet to get on one slide, so here's the second part of it. So on the second part of it, I'm looking at the premiums and the return on investment and the annualized return on investment. Here, I found that now checking things as I am on that percentage of uh, the strike price that comes out of stock buying power usage, I found that two were not so good at all, and that was Root and EWBC. That's the one. Oh, in fact, there they are, EWBC and Root. So they had 44 and nearly 70% stock buying power usage, so they got thrown out. So at the end, I've summarized it. I've got them in this purple shading, for whatever reason they've been thrown out. But it also changed the ranking. So the original ranking is the order that they're in, 1 to 12. But we saw three of them fall, got thrown out anyway, and four of them rise. So what that's done is kept in play the number one and two, BMRN and MRK, but it also brought back into play, because we've now got an annualized return of 122.46% VZ, which moved into sixth position. Now, what I would also do is say, fine, okay, I may not want to go with Prim, because it is only an 80, called it 85% annualized return on investment. But that is something, and probably also VZ, that I would now consider buying instead, buying for the short term. So that's the outcome. You'll see how much changed over the course of a working week. And it tells us that we can't just rest on our laurels and use the stocks that came out the previous weekend. You've got to check the research every time you trade. If you do want to learn how to do this, then go off to the website, myinvestmentclub.co.uk, and you can join the course there. It costs £250. Now, it's a 10-week course, and we are 7 weeks into it. So there are 3 live sessions left. They're on Thursdays. I run them at 3 o'clock in the afternoon UK and 6:30 in the evening UK. That's to accommodate people who are working and who have domestic chores early in the evening if they're not working. So I'm a bit flexible with it. All of the rest of it, and eventually all of the course, goes onto the website as a recorded course. And I'm putting extras in now. I'm putting spreadsheets and things in. So well worth it. And the course covers everything I do, just absolutely everything. You'll learn the whole lot. I haven't held back at all. A couple of people have joined the Facebook group this week. Thank you very much. It's the Extraordinary Stock Trading System. If you're not already a member, please do so. I have sort of left it alone for a couple of weeks, but this week I will start posting in it again. And if you're not already a member of one of the clubs, then you can join. If you go to myinvestmentclub.co.uk again, you'll find out more about the clubs, and you'll also get a join button. And you can speak to me, or you can speak to any or all of the 350 members to verify what we do. You don't have to put a fortune in. I look for people to contribute either £100 a month or to put some form of lump sum in. If you have a difficult week, I don't mind if you miss. We're here to help, not to make life difficult. Some people put a lot more in, like 100,000 and more than 100,000, and that's fine. Okay, so that's about it for this week. I thought that was quite good stuff. I hope you agreed. Thanks very much.